Hey everyone, what's going on? It's Coattail Trader here. Wanted to do a basics video here of the futures market and trading in general. So what you're looking at here is a 1 minute chart of the E-mini S&P 500 futures contract. Um, which basically means this side right here, these are what they call candlesticks. These are formed after every minute. You can see, I don't know if you can see, there's a timer down here. You probably can't see it. Every time a minute goes by, it changes. Let's see if I can do that so you can see the candle moving. So you can see price moving down and down and down. Now, when the minute is up, this candle will close and will form a new one. So every time a new candle closes, it forms this. Basically, the green candle right here. So the basics of a candle are the bottom of a green one. You have your open, your high, your low, and your close. Let me see if I can find one that'll demonstrate that. Okay, here's one right here. So the bottom of this candle right here, this little green one, is the open. The top line, this is the high of the candle. Right here is the low. And then this is the close. So when the closing price is above the open price, it's green. When the closing price, as in this case, is lower than the opening price, it's red. So that's what that means. This over here is what they call a depth of market. Basically what this is the actual buying and selling going on at the time. I like to talk about the market as it's an auction. That's all it is. All the stock market is, the futures market, any market, it's all an auction. What's happening is people are bidding to buy and offering to sell. You can see right here, there's actually quite a bit going on right now. Price just broke through a level here. You can see three actually, 1, 2, 3, pretty hard. So there's a lot of selling going on right now. But basically what this is, what you're seeing here, these are the actual transactions taking place. Now on the left side, this is the bid side. The bid side means that these people here, these are all orders waiting to buy. Over here, these are all people with orders waiting to sell. This yellow is actual prices getting hit, meaning a transaction has occurred. These are what they call limit orders. Okay, so I'm going to go down here just because this is moving too fast. So what here, and you'll see this change based on the market, people will cancel orders, add new orders. So right now at this moment in time, 808 contracts, doesn't have to be people. Now it's 815 contracts. Oh, see, basically okay, let me just say it like this. Whatever this number is here, that's how many contracts are waiting to buy at this price. They will not buy above this price. So if price gets down to this level, they will buy. Up here, same thing. These people will not sell. They refuse to sell for any less than this price, whatever they're at. So these people right here will not sell unless the price hits 66 even. Now these yellow ones are what they call market orders. Whenever you're seeing a transaction, that means someone is hitting the bid. Someone is just coming in and saying, screw it, I don't want to wait for price to get here, I want to sell now, or I want to buy now. So when the yellow is up here, that means someone just bought. When the yellow hits in here, that means someone just sold. So people are buying, and the number in the parentheses tells you how many contracts at that level. So you can see one buy, two buys, two buys, one sell, two sells, six sells, 19 buy. They go by very, very quickly, as you can see here. And these transactions are represented by tick movements. So you can see this number matches this number right here. But basically, it's just an auction. It's all based on supply and demand. Same with everything. When the demand is high, the price will rise because more people trying to buy. When the supply is high, the price, as in here, so price got up to this point, it did what it called exhausted. There was no more people willing to buy at 67.75. I'm sorry, at 77.75. So all of a sudden, supply outpaced demand, and it started to fall. And then the sellers came in and just started selling everything they could. The buyers tried to come back in and prop up the market, but it didn't work, and it just kept falling and falling. But again, basically the stock market, the futures market, it all works the same. It's just an auction, people buying and selling. Think of like eBay. It's the same thing. These people here are not willing to sell for unless they get their price. These people are not willing to buy from these people unless they get their price. A transaction only happens when somebody with a market order comes in and says, "I don't care what the price is. I want to get in right now." So that's what it is. That's how the trading of it actually works. Now there's many different contracts. There's the E-mini S&P, which you're looking at. There's the Dow. There's the Nasdaq. There's wheat. There's corn. There's gold. Physical commodities. This index right here is not a deliverable, meaning if you bought a futures contract, somebody's not going to deliver the entire S&P 500 index to you. If you were trading, wheat and corn and gold and things like that, there is a possibility of that, but that's a whole other video. But basically, that's all you're watching here. That's what happens in the stock market every day, people buying and selling. Hopefully that was helpful. Let me know if you have any questions. Please like my page, Coattail Trader, on Facebook. Thanks.